So it's Q1 and this is the beginning still of the year, going into Q4 or Q2, and we still maybe failing challenges and we still can't really seem to get funded, or we're dealing with a situation where just trading just still not working for us. This is still a scam or whatever you guys feel in your minds. This video is literally for those types of traders, right? If that's you, this is perfect for you. So don't skip past this because we're going to go over mainly 3 different things to look out for when it comes to liquidity phases. Let's get to it. So the first thing we want to focus on is what is a liquidity phase and why is this actually the most accurate strategy at this moment, and why this strategy is so effective regardless of whatever quarter you're in, and why this will always work. So we know that the market consolidates pretty much every day, depending on if you're a scalper, and pretty much every other week, depending on if you're a swing trader, right? What I mean by that is the market will do something like this, create a trend, right? We have a very basic strategy we follow. That's a trend-based strategy. But then we notice this happens. We notice that we start to get into situations where it's a consolidation, and then the consolidation can be stuck in this moment for so long. It's like your strategies don't no longer work because you see the market will go up and then out of nowhere it will drop, and out of nowhere it will go right back up. Well, that is where I'm going to help you out at, literally, because with the liquidity phase, it is part of a schematical play that was developed early 1800s, and this is called Wyckoff theory. When we talk about smart money concept, when we talk about order blocks and supply demand, this whole theories that we think is the new wave of trading has been developed early on, and that was a part of the Wyckoff segment. So when we even get into the ICT and get into all of these different things, all of that is also part of Wyckoff. I found a simplified way to, instead of trying to figure out the spring, the test, the last point of supply, the signs of weakness, the automatic rally, buy point, buying pressure, buying points, we don't need to worry about any of that. We can just focus on one simple thing, right? So the first thing we want to look at is when the market is doing something like going sideways, our main focus is to look at 1, the overall direction, right? And then 2, we need to ask ourselves, where is the equals low and the equals high? And what I mean by this is when we look at a situation here, we notice that the market created a double bottom as well as double top, pretty much created this whole entire double bottom, double top throughout. Now, we understand that in consolidation, there's no momentum going on. However, when you guys see double bottoms and double tops, essentially, we train ourselves to say, well, when we see a double bottom support or form on the support level, we immediately buy it. But then sometimes we forget that there may also, for some odd reason, there may also be some type of double top, which can look like this. So let me do it better. So it can even look something like this, right? Where you will see a double bottom that looks just like this, because you see it hit the same area twice, then you'll see a double top. And a lot of times people get confused. So let's go right back to what I was saying earlier. It is important to know the overall direction because I'm gonna prove to you why. Let's say that you are a seller or a trader that trades support and resistance, double bottoms, double tops, which is basic price action patterns, basic price action analysis. And you got in the trade because you noticed that this support level created a double bottom, right? And then we see the market was going down. And then you seen the very traditional liquidity sweep, liquidity grab had happened, and you immediately buy it, assuming that it's going to go up. Well, in theory, it will go up, but it will continue back down because the long-term pattern was a downtrend. So if you're on a 4-hour or on a daily scale and you see a downtrend, your thought process mentally should be selling. However, as a scalper, a lot of these big plays don't mean too much for us, but if we map it out right, we still will be fine. So in theory, ideally, you will want to wait on that liquidity grab, right? That will happen, right? It will take out all of this money that's here and then it will hit up. But then 9 times out of 10, it will create something like this and then immediately drop. Maybe this might be a news event. Maybe this just might be a regular move. And you're like, well, what the is happening? So in theory, essentially, your main focus is to sell it. But why is this move happening? Why is this move happening? This is where the liquidity phase comes in. So what a liquidity phase is wherever you see equal lows or equal highs, don't look at it as a double bottom or double top any longer. Let's take that whole initial idea of buying and selling double tops, double bottoms, because I'm gonna be honest with you guys. Institutionals and banks understand a retail trader will always buy at a double bottom, will always sell at a double top, will always buy at a support, will always sell at a resistance. So they're going to trap you into believing this is the perfect setup. The moment you get in this perfect setup, you sell it and you realize you cannot fucking hold a solid trade and you can't trade at all. You think it's a scam. But in theory, that is because they know majority of the traders are trading that way. So if you go on YouTube and you see a strategy that has over 5 million views and you trade that same strategy and the institutions know that everybody's trading the same strategy, do you think they would switch up the market? This is also a reason why you always see market switches so much, because they understand majority of traders are trading double tops, double bottoms. They understand majority of traders are trading trends. They're trying to win. They're trying to go against you. That's the whole business model of a trader or of a trading broker. Liquidity is to go against you, and that's how they make money. So of course they're going to play it smart. So how we have to think about this is when we see equal tops and equal bottoms, right? Equal lows and equal highs, we're just going to wait. We're not going to get into the lollygagging. We're not going to get into the BS that they want us to get into. We're just going to wait. Us waiting means when the market either takes out that high or that low, you then now trade it to the next area that it hasn't taken yet. What do I mean by this is, if you look here, notice market went up. The moment that market goes up, you can then now start your sell position, especially if the market goes up the very first time from an equal high, equal low, and the overall trend is down. Best believe you are going to make more money because you can hold the trade longer, because you're following the trend on a bigger picture. So the whole process is you need to then now wait on market to come up, break that structure, and it could grab even more liquidity and then break structure once it grabs the liquidity. And then you can even get in doing a pullback, or you can just do a simple sell stop and then you sell it. However, when you sell it, guys, understand risk is everything, because you do not know where the market could actually lead. We don't control it, unfortunately. So the moment that market hits this TP, or if you want to call it a TP, move your stops to some profit or take half profit. Once you do that, then you can start trailing your stops and just take this all the way down if that's what the trade does. However, sometimes that doesn't happen. Sometimes this happens where it just goes right back up to create a bigger pattern, right? Let's say that this was the bigger pattern, and then it will come right back down. That happens all the time. We know this. But in order for us to be ahead of the game, the only way we have to be ahead of the game is to look at that liquidity and understand risk. That is the number one reason why 90% of traders fail, is because they don't fully stay consistent with risk. So if we look at an actual picture here, or the actual live market, here's a prime example. Notice that on a 1 hour scale, we are going up. Notice here we had equal low. Notice here we had equal high. Now in your eyes, you're like, all right, not fully understanding what's going on now, but I just know we got equal lows, equal highs. A lot of traders right here, this is what the problem is right here. A lot of traders will see this beautiful, beautiful candle wick. They see, oh, grab liquidity here. We're buying this, right? If you're on a smaller scale, this probably would have worked out perfectly. But regardless, don't think that. Don't think that way, because even on a smaller scale, let's just say this was a 1 minute, you still would have been fucking played, literally. So you need to capture the idea of understanding the moment you see equal highs, equal lows, known as double bottoms and double tops. Don't think of it as a traditional sell and traditional buy. Look at it as there's money in each high and each low, and all they're going to do is just take that money out. So notice that it went up. Why did it drop? A lot of you guys are like, what the fuck is going on? Why did we drop? The reason we dropped is simply because we noticed that it also had equal lows down here. Why is it dropping so far down in the first place? Because there's a lot of orders that people's putting buy orders right here. Everybody's putting the buy order right here because this is now support to them. Like I said, we're smart. If you're watching this video and you watch it this far, you're going to be that 10% that's going to succeed because this is a successful strategy, because this is part of momentum regardless. But you're in a waiting process. You're not getting into a buy here at all because you're going to definitely get fucked. Sometimes it works, and it has to work because that's how smart money makes it seems like it's reliable. It's a reliable strategy or reliable way to trade. That's why sometimes you notice support resistance don't always work, and sometimes it does. I always say that's a 50-50 strategy if you only trade support and resistance in double high or double top, double bottoms. Long term, your money will either be the exact same amount you put in or you will lose it. You will never be profitable if you're following that trade because they have to fake it to make it. But what I really mean is they're going to play you to think that is a legit strategy and it works, but in reality, it really doesn't. They're just faking you to believe in it so they can take your money the next time. You might see it works twice. Third time around, you notice it doesn't work. It might work 3 times, 4th time around, didn't work. So you're just going to sit here and wait, right? You're going to wait, and not even that, but being on the 15-minute, if you find a perfect entry inside here, which is why you should subscribe. We will talk about that in a different video. You will be able to catch this sell, and then you will be able to take TP1 here, trail your stops, maybe put your stops here. And then if you want to keep trailing it because it's creating new lower highs, you can keep trailing. So you would have been profitable, right? But I'm going to be realistic with you. I'm taking TP here regardless. I'm not trailing shit. I'm just taking TP regardless because that's just how I am. Like, let's be honest with ourselves. Realistically, when I'm teeing blues and it's a good blues and I don't know where the fuck the market's going, I'm just going to take that stop loss or that TP right there. That's it. But that's all you're looking for, man. That's literally all you're looking for. Right, let me just show you another idea here. So it can be as tiny and it can be as literally compact and refined as this right here. Notice how we had equal highs, right? 1, 2, technically 3. If we look at it like that, we had 1, 2, 3, 4 equal lows. You can even see this if we were to take out the line grid, you will see a double bottom, head and shoulders pattern, right? But regardless, these are equal highs. Notice news event, we immediately drop. Everybody is selling right now. But why the hell did we go right back up just to go right back down, just to go right back up? It is all part of the liquidity phase. It is all part of the process of liquidity. So this is why this strategy is the most defined strategy that will make you a successful trader, that will turn your $100 to $7 grand to 10 grand to whatever, because without this understanding, you will not be successful. Without the understanding of risk, you will not be successful at all. So if you guys are still having problems trading, we have in our actual Discord community a bot that is successful at a 68% right now for the past 2 weeks. We are at a 68% win rate, and you guys will see it as you're seeing it here. A lot of people saying this bot is insane. They've been making money. It's been helping them pass challenges. It is only great for futures, contracts, indices like US 30, NASDAQ, S&P. As you guys heard, it just called out another trade there. But it's also good for gold as well, and it does call out gold trades as well. So if you guys want more on this bot that we have, which is the most prime bot out right now on Discord, make sure you check that link down below. You can get in tune with it, $50 a month if you want to. If you want to get tuned in with everything else, just let us know. Follow me on Instagram. Subscribe to my channel. I appreciate y'all. The bot is still calling out trades right now. It's crazy. But I'll see you guys in my next video. Boy Solo, I'm out. Peace.